It's time now for a look at the market action on this Monday, and for that I'm joined by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thank you for inviting me today.
So we start the week with some more turbulence on the trade front. As we just heard, Japan will be restricting its exports to Korea of high-tech materials used in displays and semiconductors. What does this mean for Korea and Korean companies?
South Korean chip and display makers are expected to embrace yet more uncertainty from Japan's restriction of exports of key materials for their production amid diplomatic rows between the two nations. The Japanese export restriction is adding another burden to Korean tech firms, which have been in an awkward situation over the U.S. ban on Huawei, a major client of memory chips. As it could take about 90 days for Japanese companies to gain approval for their exports for the materials, major chip and display producers will have to find alternative sources to maintain a stable level of stockpiles after the current contract expires. While the new rule means a more complicated process, not an export ban on the materials, the rule may constrict production activities for a while. Japan's new measure could affect production process of Korean chip and display makers in the short term, but it could benefit them in the mid and long term. As memory chip and display companies are currently grappling with the supply glut, local manufacturers could clear out the stockpiles and could leverage their bargaining power over Japanese companies later.
Yeah, that's an interesting possibility. Well, in another trade conflict at the G20 last week, President Trump and Xi Jinping agreed to a truce. How have markets responded to that, and what do you see in their deal?
The Osaka truce has reduced the possibility of tension escalation in the near term, and the results slightly exceeded market expectations. Though there's a lack of detail over the next steps for U.S China talks, many were surprised by Trump's decision to allow Huawei to buy some products from U.S suppliers. Stocks rallied and bond retreated on Monday as a thaw in Sino-U.S trade dispute tempered the risk to the global economy. However, I don't think the likelihood of a deal has necessarily increased. It is probably in the best interest of both parties to keep the talks running as long as they can. It is still unclear where the talks might go.
Yeah, well, now it's July 1st, so we're in the second half of 2019. What's the outlook for the global economy for the rest of the year? Are there any particular things we need to watch?
In the second half of year 2019, I expect the global and local economic slowdown to continue steadily if the U.S. China trade dispute does not make a dramatic progress, and the uncertainty in this frontier is still pretty high. The U.S. China trade talks are one of the most important events in the second half of 2019. Even after agreeing to resume trade talks with China, President Trump said no timeline existed for reaching a deal and suggested that the two sides remained as far apart as they were when talks broke up in May. The number of the rate cuts by the Federal Reserve and their timing are another important events to watch carefully. The rate cuts by the Fed will improve investors' sentiment, while they can put more pressure on the major central banks.
All right, Dr. Hwang, that's where we'll have to leave it today. Thanks so much for coming on. We appreciate your insights.
Thank you very much.